Joining me now is Emily Roland, co-chief investment strategist at Hancock Investment Management. And Emily, is that a reference to T-bill and chill? Are we bringing that back?
Well, no, it's really just a reference to, leading up into the election. We just wouldn't overplay anything right now. It's really about managing the risks on either side. You look at the equity market and you look at large cap growth stocks, even though we're still overweight, the evaluations there are extremely extended. The S&P 500 growth index is trading at a 50% premium or 54% premium to its long-term average. But then you look over at value stocks and the earnings just aren't there. They have not been robust. So then you look down in market cap. All right, maybe we could go there. Nope, those are low quality stocks. 40% of the Russell 2000 index is comprised of companies that don't make money. So we're going to the middle here. Mid-cap equities are trading at the steepest discount to their large cap counterparts since the late 1990s. We like the valuation protection there. And they're also benefiting from fiscal spending and from onshoring activity that's prompting a manufacturing renaissance in the United States.
All right. It feels like we need to get Neil Hennessy and some of our other mid-cap fans back on and talk about this often overlooked middle child. But to back up for a second, what would you do then with bonds, with fixed income?
Yeah, bonds are tricky as well. And you guys just talked about this massive backup in interest rates that we've seen. Bonds just aren't acting like themselves. I mean, Friday was a remarkable day. We saw this pretty bad jobs report. I know there was a lot of noise, but 12,000 jobs with significant downward revisions to the tune of 112,000. The ISM Manufacturing Index, which is a key gauge we watch of economic activity, coming in at 46. That suggests contraction. And then meanwhile, you see bond yields backing up 10 basis points. Oil prices really didn't move much. So pretty interesting moves here that are all based on political sentiment. So we also want to think about going to the middle in bonds. The challenge going into credit, yeah, the economy is doing okay, but credit spreads are remarkably tight, 275 basis points. That's well below the 20-year average of 500. So I would say that high yield bonds are likely priced for perfection here, could see some spread widening. But then you think about adding to duration, and there's obviously a risk there, as you and Steve just talked about, if there is increased fiscal spending, potentially more supply coming online, which would push up bond yields. So we're looking at the intermediate part of the curve. We're hitting it down the middle of the fairway at core and core plus bonds.
Meet me in the middle. We got to get that song going as the chorus while we discuss this. So do you, I mean, if there's, I know you're talking kind of long-term and oriented, but we are going to probably get some big moves one way or the other, whether it's tomorrow night or as the results come in, could be stock sell-off, could be bond sell-off. Are you guys ready to kind of jump on opportunities like that?
Yeah, I mean, we don't look at these shorter term moves in the market. And I think one of the things that's really interesting, we looked back at the cross asset performance under the last two administrations, and it's actually almost exactly what you would have thought based on policy. So, for example, under Trump, Chinese equities were one of the best performing assets you could have owned. Technology stocks were way at the top of the list, even though there were measures, regulatory measures to potentially break up tech. Technology stocks did great. You look under the Biden administration, best performing asset class, energy stocks, oil prices, exactly the opposite of what you might have thought given some of those green energy policies. So we tend to place a lot more weight on the macroeconomic backdrop, the earnings backdrop. Remember, over time, stock prices follow profits. We would try to fade the noise around the election. And to your point earlier, some of this could just be promises, and we still don't know exactly how these policies might be implemented.